Local bourse shared over 2% last week as investors sold off stocks of companies that released weak third-quarter earnings. Well, joining us for an outlook on the market today and, of course, for the week is Robert Omotunde. He's an investment research analyst at Afrinvest. Thank you so much, Robert. It's a pleasure to have you.
Thank you, Esther, for having me.
So we saw investors punishing those companies that released weak third-quarter earnings. It's been mixed largely, but we've seen some worse than others. So let's start with, we bantered a few names in the course of last week, looking at how they performed. But let's talk about who, for you, have been the clear winners and losers.
Well, for us, it's basically the banking stocks, if we may say. You would recall that for about a few weeks now, a lot of these companies have been churning out their result. And if you analyze across sectors, the major sector that has not been too hit by a lot of the concern that we have, the weak results have been, the banking sector. And of course, we saw that for the consumer goods sector, they are the worst hit, if I can put it that way. Revenue has been down, earnings has been down, and generally is all gloomy for the consumer goods sector. But the banking sector has managed to stay afloat. And
I think we expected the banks to do. I mean, everybody kept their minds. How do I put it? We're expecting the banks to not do too badly. Yep. But yes, some actually did surprise against others. But let's talk about the consumer goods. Like you said, we saw that coming. Yep. So many of the stocks now are trading at very low valuations. So for investors who are looking to be long-term, who are looking for value within the consumer goods space, where can they begin to hunt?
Yeah, for the consumer goods space, investors have to be very cautious. Even if you're considering a long-term position taking in those stocks, you also need to analyze, the short-term gains that you can see from these stocks. I mean, the best price at which you can enter these stocks, and some of the news flow around, is not helping the performance of these stocks. Okay, you see that across board, except for Nestle, that managed to release, so to say, wonderful results amidst all the bad results. Others have been down. Flour mill has just been out, this morning. Of course, you can see that bottom line was up by 400%. But if you do a further analysis, that was basically as a result of some gains from disposal of assets. So basically, operationally, of course, the company was still able to stay afloat, made 12 billion in operating profit, but that was wiped off by finance charge. So save for the gains that was made from the disposal of assets, profit will have been down by about 90%. So it's the same story across all the major consumer goods stock. USCN results was also out last week, and then the results showed that the bottom line too is not doing as well as you would expect. Profit was down year on year relative to the previous level. So for long-term investors, yes, you may want to start to consider some of these stocks who are trading at very cheap prices. But again, you want to see at what best price, if I can say optimal price to enter, so that in the long run you're better off. Because if you're buying at a price that will probably trade lower, say 10% or 20% lower in the next few weeks, why not wait and buy?
Now, Robert, beyond the price, now yes, price is good. Having if you can identify a good entry point, good for the investor. But what about the fundamentals? I mean, I assume investors are aware of the operating environment, what these companies, especially those in consumer goods, have had to experience this year. I mean, many of them have lost market share in the Northeast due to the insurgency, operating costs, fallout from the naira, the valuation of the naira, rising finance charges. So can investors still look at the fundamentals of these companies, perhaps look at their historical financials and see that, okay, yes, company A has been coming from a good place, but because they ran into bad weather this year, I mean, all the factors I mentioned, yes, bad year for them, but can I stick with this company based on that, or do I begin to move or look for that company that was able to perform regardless? I mean, you mentioned the Nestle. I mean, Nestle, it's a very old company. I mean, it's a foreign company, and they have a lot of power with, behind them. But how do investors begin to balance fundamentals with good valuations?
Yeah, interestingly, most of these companies that we talk about, particularly in the consumer goods, they have sound fundamentals. But the major challenge this year has been the regulatory headwinds, particularly around the FX restrictions, which has impacted majorly on their cost. But if you analyze in terms of demand or the viability of the business, most of the businesses in this sector, the businesses are still sound. They have good business model. Demand is still good, which is
despite the competition in the southern market.
Despite the competition, okay. So the fundamentals are fine for those who want to take a long-term view, investment position in these companies. However, the short-term regulatory headwinds are the ones posing the threat that we're seeing at this time. But for value investors, yes, fundamentals will be, a particular thing to consider.
I'm looking at the market now. It's actually up. I mean, we had almost 3% gain, loss rather from the market last week. Yep. So can we say, is it too soon to say? Because earlier I was asking if the market has bottomed out. Is it too early to assume that?
It might be a dead cat bounce,
meaning
the market might still upturn, to go the negative direction. The only positive news that the market awaits this week is the possible announcement, of the fiscal team by the president. Now, if that happens, we might begin to see some form of positive sentiment in favor of the market. But in the interim, earnings are down. The regulatory space is not looking as attractive. Foreign investors are not particularly considering equities, and local investors are taking the sidelines. So it's all not looking too rosy for the market in the week. Well,
let's hope that the market can continue this positive streak and positive today. Thank you so much, Robert. It's been a pleasure having you, Robert Omotunde, investment research analyst at Afrinvest. We've got